And now, without further delay, let's begin today's event, sponsored by CoStar and hosted by Accounting Today. I'd like to introduce your moderator, and that is Dan Hood. Dan, you have the floor.
Thank you, Adam, and thank you all for joining us at today's webinar. It's a timely topic. I know a lot of people are looking to deal with these lease accounting standards, the new the changes that FASB has wrought, FASB and GASB, I should say, have wrought, and implementing them. And it's a big issue for leaseholders, for companies, for a lot of people. So I've got a great presentation today. I'm going to introduce you to your speakers in just a minute. For speakers today, first off, we've got Matt Waters. He's the Director of Lease Accounting with CoStar, a former lease accounting manager with Home Depot and American Tower. 15 years of experience. So he knows a lot of, he knows whereof he speaks. Matt, thanks for joining us.
Hey, thank you, Dan, and thanks everybody for joining us today. Again, my name is Matt Waters, and I'm a CPA. I've been at CoStar for about 6 years now, and at this point, we've helped hundreds of companies go live with lease accounting software for ASC 842 and IFRS 16. Prior to joining CoStar, I worked at the Home Depot where I led the lease accounting team. I was there for about 6 years and also worked at American Tower. As Dan mentioned, that's a cell phone tower company, and at American Tower, we managed literally hundreds of thousands of leases in that industry. So happy to be here today, and I'm really pleased that Nick from Protiviti is joining me. And Nick, will you take a moment and introduce yourself?
Thanks, Matt. Nick McKeon. I'm a Managing Director of Protiviti and our Business Performance Improvement Solution. I focus specifically on advisory services for the CFO's organization, so anything that rolls up under the CFO. In particular with lease accounting, I've been leading 842 and IFRS 16 transitions, along with software implementations, including CoStar, for over 3 years now. So really happy to be here and excited to talk about this topic. Thanks, Matt.
Thank you. And again, we're going to talk today about why lease accounting software systems fail. And CoStar is a lease accounting software system. So you may be wondering, why is CoStar telling us why accounting systems fail? And the reason is we've heard a lot of feedback coming from the market about lease accounting software. As I'm sure you're aware, the non-public companies have their ASC 842 deadline coming up this year. We actually thought, a lot of our business this year, the majority of our business would be non-public companies. And while that is certainly on the rise, we've had a huge influx of business from public companies whose deadline was a couple of years ago. And the reason why we're seeing that influx of business is they've discovered deficiencies in their software, and they're already switching out software. So they made a decision 2 or 3 years ago, went through the whole process, RFP, and implementation, and then ultimately got into using the software that they chose. And now they're already coming and looking to replace that software. So we're replacing lease accounting software in large numbers. And just looking at that scenario graphically, as shown on your screen now, pre-2019, most companies were in Excel, with a much simpler standards at that point. Most leases were operating leases. And of course, those were treated with straight line expense recognition. So spreadsheets were suitable for a lot of companies. Some had a system in place. But by and large, a lot of companies implemented a lease solution around Q1 2019 for public companies. Now, what's happened after that is what we'll show on the next screen. A lot of dependencies were discovered. So companies that thought they were upgrading, getting out of spreadsheets, basically became disappointed in the generic solution that they chose. They ended up right back in spreadsheets with manual workarounds, and really not receiving the value that they thought they were contracting for. So that's driving them to re-enter the software marketplace, and in many cases, CoStar is replacing that solution. So that's where we picked up these 9 items from those customers who have told us in the process of switching over, these are the items that we're looking to make improvements on. Basically, can CoStar do this? And we're pleased to say that we can offer functionality to keep companies out of manual processes and manual spreadsheets. The other source of information for this, I don't want to leave this out. We've talked with many of our accounting firm partners, Protiviti being one of those. And when we talk with our partners, they express, both from talking with their consulting clients and also even audit clients, features that are missing in some systems in the marketplace. They ask if CoStar has those systems, has those features, and in some cases, one example I'll give you, some auditors have thanked us for having certain functionality. So I'll get into that in a moment. But now let me turn it over to Nick for a little bit of analysis on the root cause of project failure.
Yep. So similar to what Matt talked about with clients approaching them about, new software implementations, even though they had one a few years ago, as we're going through the adoption for a number of public and private clients over the past 3 years, we've seen issues pop up, not just now, but even 3 years ago as companies started to select software solutions. But more than just that, right? It's not just the selection of a solution. It's also the whole transition. So how are you getting the lease agreements? How are you determining full population completeness, so to speak? And then taking it from, birth of the adoption process to tying it up with a bow for your auditor. And so what you'll see, that kind of weaves through this entire presentation. But as we started to unpack, what's gone wrong? Why are we hearing these things? We've a lot of what we've been hearing from clients is, hey, we just want to get through it. And at the time, it made sense. And now, they're saying, hey, it's either time to hit the reset button, or is there more that this solution can do? And so what we've got here is just more of the common points that we've heard. And if you've gone through an implementation process and maybe had a bad experience, this may feel like I'm picking at the scab a bit. If you haven't gone through it, take this presentation and some of these points as, hey, here's what I got to think about. Here's what I got to avoid moving forward. So point one is there was so much pressure to get something in for a lot of companies as they were heading up against the deadline. So the focus was really on price and speed to implement, which are obviously two important factors, but they're not the only factors. They didn't take into account other stakeholders. So are there other groups outside of just the core accounting team that need access to this, that need information from it? Your real estate, do you have a real estate department? Are they going to leverage any functionality? How are they going to access data from their legal group, your technology group as well? And then you move on and you see that the way providers are selected is they didn't really do thorough demos or even come to a conclusion on what do we really want or need up front to do an effective demo or software selection process. In a lot of cases, what we heard was a client would say, well, this person on my team happened to work with this product at their prior employer, and that was good enough for them, and they went with that, right? Well, what was the functionality of that solution? Is that a apples to apples comparison? How were they using it? Was it actually doing the accounting? So the requirements in many cases were just, I need the accounting right. And so when you think about what's beyond that, the reporting and the level of depth and flexibility you need on that weren't really considered. Separately, businesses change, right? You're going to go through acquisitions, growth. You might expand globally if you're not already. You might start to encounter multiple currencies. You might have to account for leases under IFRS 16 as well. So not just thinking about what the state of the company is right now, but as the company grows, is it an acquisitive company? That's something you got to think about and forecast out. And that wasn't really always part of the algebra, so to speak, as they were going through the process. A few final points here is, the notion of integrations. We view those as vitally important because as you think about what accounting departments are trying to do right now is, really shorten the time to close, implement some sort of automation, reduce manual activities. Integrations are a great way to adopt a lot of that as part of an implementation, and those weren't always contemplated as part of the selection or the design, quite frankly. And so it's really a missed opportunity. So you have a group that probably didn't think that there was any need for that because the accounting under 840 wasn't as complicated, and so there weren't as many manual activities. And the thought was, well, wouldn't it be pretty similar post-adoption? Well, it wasn't, right? And so now you've got all these manual activities popping up. And then in a few cases, at least, we've seen clients who adopted what their real estate team was using for real estate property management, where some solutions had added on kind of an 842 accounting feature to it, really wasn't effective, and it didn't meet all the needs of what a true accounting and reporting team needed to produce on a monthly basis. So just wanted to run through that. We thought these were interesting for you all to hear. Hopefully things that you can think about as you move forward. So I'll hand it back to you, Matt.
Thank you, Nick. And Dan, I think that brings up our first polling question.
It does indeed. And here we are. We're asking, which best describes your company and status for ASC 842 or IFRS 16 lease accounting transition? Are you a non-public company you're working on a transition? Are you a non-public company you've already transitioned? Are you a public company that's already transitioned? Are you a public company that's already transitioned, but you're looking to make improvements, or other not applicable? So if you're with an accounting firm that works with clients, that advises clients, that's probably the place for you to go in the other not applicable. So the way this works is you click on the radio button. That's the little round button to the left of the answer that works for you. Then you go to the right and click submit to make sure it gets registered for credit. So you're clicking twice, once to pick your answer, and then once to make sure it gets submitted. As Adam mentioned, if you're not seeing this, if the poll didn't pop up for you, you can try refreshing your browser. If that doesn't work, every once in a while, turns out if you're looking at a full screen, your browser in a full screen mode, if you take it off full screen mode, that might help it pop up as well. But usually refreshing your browser should make it happen. I'm going to leave this poll up a little longer than some of the later ones, just for anyone who's not familiar with the platform. But again, we're asking which describes your company and your status for the lease accounting standards or the transition. Are you a non-public company that's working on the transition, a non-public company that's already transitioned, a public company that's already transitioned, or a public company that's already transitioned but you're looking to make improvements, or other not applicable? Again, click the radio button to the left, go to the right and hit submit to make sure it gets registered. We've got a goodly number of people, but a few more still to trickle in, so I'm going to leave it up for a couple more seconds. As Adam mentioned, you can put questions in the Q&A panel at any point in the presentation. We'll try to get to as many as we can towards the end, last 10 minutes or so. But you can put them in at any moment. You can also download the slides. They should be in the resources section on your screen, resources tab. Click on that, be able to review those. And again, you will be getting a link to the recorded version of this, so you can listen to all the stuff all the information that Matt and Nick are talking about, their insights. You can watch it yourself. You can share it with colleagues and clients as appropriate. Though again, if you're not watching on July 21st, it doesn't qualify for CPE. All right, let's go ahead and wrap this poll up. If you haven't had a chance to answer, to tell us what best describes your company and your status in terms of the lease accounting transition, please do so now. Whether you're a non-public company working on transition, non-public company that's already transitioned, public company that's already transitioned, public company that's transitioned or looking to make improvements, or other not applicable. So again, click the radio button to the left, go to the right and hit submit. And I think we'll go ahead and wrap this up now. If you haven't answered, please do so now. As I'm going to close it in about 5 seconds, I'll count you down. 5, 4, 3, 2, 1. And let's see what the status is. So about 2/5 are other non-applicable. That's probably a lot of, I know we'll have a lot of accounting firms, a lot of accountants, public accountants on here. About 1/3, probably the most, say they're a non-public company working on transition, and then relatively smaller figures for all the others. So mostly other not applicable, probably people working with those businesses, and then about 1/3, say non-public company working on transition. All right, with that, Matt, knowing that that's who we've got in the audience, I'll turn it back to you.
Yeah, thank you, Dan. That's quite helpful, and I'm glad to see we have a mix of folks on the call today. And specifically, I think this information will be really helpful to non-public companies as you consider how you're going to take this journey. I think putting in the effort up front to fully understand and learn from the experience of your colleagues at public companies, can't hurt. So we're going to dive in, and again, we've got 9 points to roll through. So we're going to do that and give you some insights as we go. The first one is this is the one that I promised you guys. I told you an auditor is actually a Big Four audit firm I was in a meeting with, and one of the auditors, kind of candidly said, "Hey, CoStar, thank you, thank you for making your report easy to audit." So of course that was great feedback for us to hear. But then when we dug in that a little deeper, and especially as companies started switching over to CoStar from other solutions, we really understand what that means in great detail now. What auditors need, and as accountants, you all know, they need to be able to prove that what you present in your financial statements is accurate. They go through testing procedures and ultimately, hopefully provide an unqualified audit opinion. But to do that, they need details. CoStar presents the disclosure report, for example, in a one-page summary. And from what we understand, almost every software does that. You get a one-page disclosure report. What you don't get in every software is lease-level details supporting the disclosure report. In CoStar, we provide that. We have the one-page summary, then we have all the details, lease by lease. We even include leases that have been executed but not yet commenced, which is another category of detail that you need. We detail out any subleases, any reporting exceptions. So, for example, if you have a policy of immaterial leases, or if you elected to count leases less than 12 months as not receiving balance sheet treatment, all of that is documented in our supporting detail. So it really makes it an easy experience to just download that in an instant from CoStar and then forward it on to your auditors. Another report that we provide lease level detail on is the roll forward report. From what we understand, most software solutions don't offer a roll forward report. So companies are switching over to pick up this functionality. And what this is a presentation of your balance sheet accounts. So for lease accounting, that's the right of use asset and lease liability. And we'll show you the beginning balance, the ending balance, and then everything that changed for the period in question. So it'll pick up things like terminations, renewals, impairments, all of the different buckets of activity that can change your lease accounting balances will be reflected on that report in an easy to read fashion. So auditors really appreciate this. Accountants really appreciate this being available instantly, because I know from experience, I used to work at Home Depot. Auditors would ask for this report. My team and I would spend days, in some cases, running Excel reports out of the ERP system and performing VLOOKUPs and pivot tables to get everything in the right format. With CoStar, it's literally instantly available, so much so that we have a lot of customers now who run the roll forward report, not just for the year-end audit, but for every month-end close. You can set the dates to just cover 1 month, and they run it and attach it to the reconciliation. So it's added value to that process as well. Ultimately, the audit details and reports are causing people to switch to CoStar. It's one of the biggest items we hear about, and CoStar has all the details that you need there. And Nick, I'll turn it over to you for your perspective.
Yeah, I think this is a really good example of, if you haven't started, and it seemed like there were roughly 39% of the attendees that haven't or that are transitioning this year. It's so critical that you're starting to work early on with your external auditor. I've always found, at least in my clients, they've always been very helpful, willing to at least provide a perspective. But you get a sense for what they need to see as part of the audit, right? in some cases early on, we were all learning it together, right? Our clients were, we were, our external audit firms were understanding how we're going to audit this moving forward. So avoiding things like having to pull together spreadsheets to support the reporting coming out of whatever software system you choose is again, just think of it as not throwaway work, right? You're trying to avoid throwaway work as part of this process. You're trying to eliminate manual activities. Engaging your external auditor early on so that they understand how your transition is going to work, the solution that you're selecting, and what they're going to need from an audit perspective. It's really critical.
All right, thank you. Thank you very much. And just a brief example here. This is I call it a truncated example because if I tried to put the whole roll forward report on a slide, it wouldn't work. But basically, you just see a representation here of a roll forward opening balance, all the activity, and then the closing balance. Now, moving on to our next topic, ad hoc reporting flexibility. So we're finding that a lot of software in the marketplace, they do not offer ad hoc reporting. CoStar has an ad hoc reporting tool that is super easy to use. Matter of fact, I've talked with one of our customers recently, really large company, Fortune 10, kind of range. And he said the ad hoc reporting tool is his favorite feature in CoStar, basically because his team gets so many requests for information. So it can come from auditors, it can come from other departments. Sometimes the audit committee will have questions. The controller or CFO, as they're preparing for the audit committee, most of us are quite familiar with the last-minute scramble to produce an ad hoc report. In CoStar, you can do that directly in the system. There's no moving things around in Excel and putting data together that way with the traditional VLOOKUP and pivot table activity. Literally every user of CoStar has drag and drop report writing functionality. So every member of your team in CoStar will have this ability. You don't have to contact a power user or an admin or worse yet, have to talk to the software vendor to get a new report. Again, literally every member of the team can produce a report with really intuitive drag and drop functionality. Nick, over to you.
Yeah. So this is one part of the applications that we found to be most helpful, in the sense that, again, you get requests from your external auditors. I mean, that's going to be, especially as you have the initial adoption, that's where a lot of the questions are going to come from. And if you've got a more complex portfolio, either geographically or even just the types of assets that you're leasing, this can be a really important and effective tool. And I think what we found is that the ability to do this also then eliminates the need to do a lot of procedures around spreadsheets that are created to support the same information. So anyone's in a Sarbanes-Oxley compliance environment, right? So if you're subject to 404 and you've got to prove out that key reports are complete and accurate, well, using the inherent functionality of an application tends to avoid that because you test the application itself versus pulling data, dumping it into Excel, and then manipulating it that way. So this is one that we found clients have had a lot of success using and saved a lot of time. Back to you, Matt.
Thank you, Nick. So just a few examples of other reports that we offer in CoStar. We've talked about a few already, disclosure and roll forward. I'm not going to read this slide, but just leave it up for a second. And if you see anything that's of interest, you can certainly reach out to us or log a question in the chat. But we'll move on to our next topic, and that is a lot of software in the marketplace has no accounting policy compliance checks or validation of lease data. So, again, this is another reason why companies are switching over to CoStar. We have we have really two levels here that I want to talk about. The first I'll talk about is where a lot of companies start, and that's with bulk upload of data. So when you first adopt ASC 842, you're going to be importing data, right, from lease data. There's hundreds of data fields that need to go into a system. So to start with, we'll talk about the bulk upload process, and it doesn't just apply when you're initially adopting the standard. Bulk upload can also be used when you acquire another company or something like that, or even if you enter into a master lease or a lot of different equipment leases at one time or something like that. You can use bulk upload functionality in CoStar. We call it an ETL tool, but what that means is basically you're uploading a large amount of data at one time, and we validate that data as it goes into CoStar. So automatic checks are in place to make sure the data is clean, so you don't get into a situation where you have garbage in, garbage out. If something errors out, you'll be able to correct the lines that errored out and then re-upload those. So very efficient way to handle any errors in the data and really catch them before they even enter the system and become a problem for you. Now, another way of entering data into CoStar is through just a workflow. You can imagine an accountant, for example, testing a lease for finance versus operating treatment under ASC 42. Now, that can be handled in bulk with an upload. A lot of times, companies prefer to handle it, case by case, because there is some discretion involved there. So, imagine an accountant entering the lease, and then they're performing the test. They mark it as an operating lease. However, there's a field in CoStar that indicates if there is a transfer of ownership as a part of that lease. CoStar will flag the user and say, hey, are you sure this is an operating lease? We think it's a finance lease based on transfer of ownership. So the user could then change, to a finance lease, or they could keep it as an operating lease. Maybe they have some knowledge of the lease or company policy that indicates that is the case. CoStar is not going to force you into any particular accounting policy, but it will be flagged. As I mentioned, the user will get a pop-up. There will also be an alert on that particular amortization schedule, so you'll be able to click on the alert and see what the issue was. And you can run a report showing all of those potential accounting exceptions. You can run it for your whole portfolio. So a manager could do that, for his whole team, and see if there are any areas that need to be addressed. So ultimately, what does this do? It helps you find problems before they become problems. Certainly before an auditor discovers the error, and that's the goal. Correct the issues and move on without it causing problems for you down the road. I just mentioned one example of one of those accounting exceptions. I think at last count we had over 80 that we're checking for every single lease, every single amortization schedule. Nick, over to you.
Yeah, good example on bulk uploads. We had a client that was using another software application where they did a bulk upload, and they noted right off the bat there were errors. Could not find where the errors were. And mind you, when you're abstracting lease data, you're doing minimally 50 data elements, in many cases a lot more, that's being typed in to an Excel upload template. And the end result for the client, unfortunately, was by the time they called us in, they were probably a few months away from their auditors coming in to effectively audit the transition. And we ended up having to do a re-abstraction because there was no way to unpack. There were errors across basically all the leases. And it all pointed right back to errors in the abstraction process that weren't caught in the upload process. So, these are real examples. They're not just, functionality for functionality's sake. They're preventative in nature if you think about it from a controls perspective. Back to you, Matt.
Thank you, Nick. And on the screen now, you'll see just a visual representation of some of the points that we talked about, validation of data, the ETL process, where you're able to load large amounts of data at one time. And Dan, that brings us to our next polling question.
It does indeed. And here we're asking, what concerns you most about performing lease accounting under the new standards, either ASC 842 or IFRS 16? Is it understanding the how-to details of the new standards? Is it having to perform manual calculations or workarounds? Is it providing lease-level details needed for auditors? Is it reporting on all requested lease data fields? Or is it nothing? You're a lease accounting rock star. Again, click on the radio button to the left of the answer that works for you. Go to right, hit submit to make sure it gets registered for credit. As always, if you're not seeing this, try refreshing your browser. That should pop it up in the front, and then you can tell us what concerns you most about performing lease accounting. And again, maybe all of these things might concern you, but we're asking really for what concerns you most. We're going to pick your biggest concern out of all these. Understanding the details of the new standards, how to do them, having to perform manual calculations or workarounds, providing lease-level details that auditors need, reporting on all requested lease data fields, or nothing. Again, for the lease accounting rock stars out there in the audience, we want to make sure we get you covered. So again, hit the radio button to the left, go to the right, and hit submit. We've got a number of questions in the Q&A panel, but we can take we'll get to as many as we can. So feel free if something comes up that you want to know more about, or you're not quite sure about, or you need clarified, or any other questions you may have, go ahead and put them in the Q&A panel, and we'll answer again as many as we can in the last 10 minutes or so of the session. But in the meantime, we're asking the questions, and this one happens to be about what concerns you most about performing lease accounting under either of these standards, ASC 842 or IFRS 16. The how-to details of the new standards, having to perform manual calculations, providing lease-level details, or reporting on all requested lease data fields, or are you concern-free? You're perfect. You got this all under control. In which case, I should probably talk to you so I can get some idea of how you did it, because it's such a complicated topic. It really is amazing how difficult it is to get all the moving pieces in line. We think we got almost everybody's in. Still a few stragglers out there. If you haven't answered, told us what concerns you most about performing lease accounting, please do so now. Select your answer by clicking the radio button to the left of it, the little round button, and then go over to right and hit submit to make sure it gets registered for credit. If you haven't had a chance to answer, please do so now, because I'm going to close the poll up in about 5 seconds. I will count you down. 5, 4, 3, 2, 1, and let's see what concerns everybody here. All right, understanding the how-tos of the new standards by far is it's over two-fifths. I only have a few, less than 10%, saying they're lease accounting rock stars, but they are here. Glad to have them in attendance. And then everyone else is a mix of manual calculations, about a fifth. Just under a fifth are worried about reporting on all the requested lease data fields. Only about 10% are worried about providing lease-level details that their auditors need, which they concern their auditors. But again, by far the biggest area of concern is that those how-to details of the new standards. I don't know, Matt, if this is what you would expect.
Yeah, I mean, I think so. I mean, especially since we have a high number of non-public companies here, I expect that a lot of non-public companies are familiarizing themselves with the new details. So yeah, this is great, and welcome to everybody, especially the rock stars. That's awesome.
Excellent. I will turn it back to you.
All right, thank you very much. And the next one we'll talk about, we actually have two kind of rapid fire here, so I'll cover two and then ask Nick for his comments. But the reason why companies are switching over to CoStar is to pick up automatic remeasurements. Now, remeasurements occur quite frequently in the leasing process, and simply what a remeasurement is, it's something that happens after the initial lease is set up. So you can have a termination, you can have a renewal, you can have an impairment, you can even have a partial termination, which requires a slightly different path than a full termination, and you can you can imagine how all of these things need to be tracked. The differences in calculations need to be built into the software. So, for example, if you process an impairment for an operating lease, an ASC 42, the pattern of depreciation changes for your right-of-use asset. That's really the only time that happens for an operating lease. So the impairment has to take its own path through the software. So for the complexity there, I think a lot of companies found that their software that they chose, right out of the gate, did not have the features that they needed to cover all of the different scenarios. So we're finding that they switch over to CoStar to pick up that functionality. Now, hand in hand with that is the next point: no automatic retrospective true-ups. What you have in CoStar is logic built into the software that recognizes when you're trying to enter a backdated accounting entry. So accountants are super familiar with this. From anybody who's worked in month-end close, the drill. You close the books, and then a week later, or maybe even a month or two later, you find out, we were supposed to have let you know that we executed this amendment, way back in May, or something like that, right? But the point is that the books are closed. It's not big enough that you're going to open the period and post the entry in the period it should have been posted in. So you have to book a true-up entry. In CoStar, we call that a retrospective true-up. It's automatic. You just date the entry as of the date that it should have been. CoStar will recognize that you've already exported journal entries for that period. So it'll say you're posting the entry, and it's related to a closed period. We're going to calculate a retrospective true-up. What the software does then is it takes what did happen, what was originally posted, compares it to what should have happened, and then produces a schedule showing you the delta or the true-up entry. Then that gets automatically uploaded into your ERP system as a true-up entry and is tracked going forward as a part of that lease's amortization schedule. So you can always show an auditor or anybody who needs to see the details around that retrospective true-up. Nick, over to you.
Yes. So these two examples, I'd say, file them under the application being then supported by Excel. So Excel ends up becoming part of the application, which is not the intent, I think, going into any implementation of a software solution. You want to avoid that because, as I talked about before, once you start creating these workbooks, spreadsheets outside of the core application, you now have to apply procedures from an audit perspective to prove out the completeness and accuracy of those. And now you're maintaining those files in addition to the information that's in the application itself. Back to you, Matt.
Thank you. And here's just an example of a retrospective true-up showing what did happen originally, what should have happened, and then the true-up entry. So, easy to follow in the system. Now, the next reason lease accounting software solutions are failing is no flexibility to split amortization schedules. And I think the most common example of this is a tenant improvement allowance. We call it TIA for short. Now, ASC 42 says that the TIA becomes part of the right-of-use asset when it's received up front. So companies are well within their rights under ASC 42 to just lump that in with the right-of-use asset and amortize it. The problem, though, comes in, and where most software solutions fall down, is when the tax department comes around asking for book tax differences. Now, TIA is a common book tax difference for lease accounting, and so it's beneficial to have the tenant improvement allowance on a separate schedule. Now, in CoStar, it's going to be parallel. You're going to have your main lease accounting ASC 42 schedule, and then right beside it, you'll have the TIA schedule. You can run them together, consolidated for ASC 42 reporting for your GAAP financial statements. You can also easily split out the TIA for your tax team. And it's not the only time that this is beneficial. You also have business combinations. There you have to quantify above or below market rents, and many of our customers use this parallel schedule functionality to keep up with those adjustments related to purchase accounting too. Nick?
Yeah, I think this is just another example like the last two where Excel just becomes part of the operating environment. And, as one of the things you need to do is you go through this process in determining which software solution you're going to select, and then how you get through the transition itself beyond just software is understanding your portfolio and your footprint. And those are things that drive a lot of these questions to be asked, up front versus after the fact as you're trying to deal with this and then creating, supplementary schedules. Back to you, Matt.
Thank you, Nick. And here's just a representation of what you see in CoStar. You have the primary accounting schedule on the right, and then highlighted and pointed out with that arrow is the TIA schedule. So just to give you a visual on what we're talking about there. Now, moving on, a lot of software does not have discount rate matching. So we see companies switching to CoStar to pick this up. What this means, and really it applies to every company, definitely companies that are large and multinational. For almost every lease accounting calculation, you need the incremental borrowing rate. And so you have different buckets of IBR, we'll call that for short. So based on the term of the lease, in other words, a 5-year lease would have a different rate than a 10-year or 20-year lease. You can have different rates based on geography or currency, or even the type of lease. So an equipment lease might use a different IBR than a real estate lease. So because of all those differences, some companies have hundreds of rates that they have to choose from. So not very efficient to make your accountants have to type that in every time. Not even very efficient to have them selected from a drop-down list, if there are in fact hundreds. So what we've done in CoStar, and I'll go ahead and show it on the screen here real quick, is we've created a matching tool shown on the left window there. CoStar will automatically select your discount rate based on your business rules. So perhaps somebody in your treasury department would upload the rates periodically, and CoStar will automatically assign the rate. So it really takes all of the the clicking and any potential for user error out of the equation. Nick, over to you.
Yeah, this is actually an area that we end up spending a good amount of time on when we're supporting clients through the transition. So up front, we'll write out a pretty detailed memo methodology around the discount rate, especially if you've got, again, as Matt said, a global footprint, different lease terms, multi-currencies. There's a lot of factors that go into it, and so we spend time with the external auditor really getting agreement on methodology and approach, because that sets the basis for how then, in this case, let's say CoStar operates moving forward from a discount rate application perspective. And then you think about errors that could happen in this process, they'll radiate through your portfolio, at least parts of your portfolio. So it's a really critical kind of risk point in the transition and then in the ongoing accounting. And if you think about, again, I keep going back to this concept of internal control, especially if you're, a SOX compliant environment, what are your controls around this? This is a pretty integral part of the accounting moving forward. Back to you, Matt.
Thank you, Nick. And Dan, that's our next polling question.
Exactly. What is your biggest challenge with your current lease accounting software, or your biggest concern with selecting a new system? Is it the lost productivity from performing manual tasks and spreadsheets? Is it stress over a lack of lease level details for auditors? Is it concern about errors for lease data entry and validation? Is it an inability, to perform requested reports easily on all lease data? Or is it none? Again, your lease accounting system is bulletproof. And if it's bulletproof, I suspect that you are a rock star. And we know we have some of those on here, so that's a viable answer. So again, what's the biggest challenge with your current lease accounting software, or your biggest concern with selecting a new system? The lost productivity from performing manual tasks and spreadsheets, stress over lack of lease level details for auditors, concern about errors for lease data entry and validation, an inability to perform requested reports easily on all lease data, or again, none. Your lease accounting system is bulletproof. So you go to the right, hit the radio button that works for you. Go to the right, go to the left, hit the radio button that works for you. Go to the left and hit submit to make sure it gets registered. See, answers are coming in. We're getting pretty close to everyone we got. I know we've got some more ground to cover, so I want to wrap this poll up fairly quickly. If you haven't had a chance to answer, do so now. We're getting close to the number of people we've got. Everyone's almost answered. Give it a few more seconds. Again, if you don't see this, refresh your browser. That should pop it up to the front for you, so you can answer this polling question. What's the biggest challenge with your current lease accounting software, or as you consider selecting a new system? What are the issues that matter most to you? Just about everybody's in, so I'm going to go ahead and close this poll up in a few seconds. If you haven't answered, please do so now. Tell us what the biggest challenge is. I'm going to close this poll up in about 5 seconds. So if you haven't picked which of these is the biggest challenge or concern for you as you look at your current system or a new system, do so now, because I'm going to close the poll up in 5, 4, 3, 2, 1, and let's see what the biggest challenges or the biggest concern people have with their new systems. About a third say lost productivity from manual tasks. Next up, just under a third say concern about errors for lease data entry, and then declining numbers. Less than 20% say the inability to perform requested reports, and then similarly, less than 10% stress over lack of lease level details for orders. And again, that 8% say their system is bulletproof, which tracks with our 6% who are rock stars. Matt, I will turn it back to you.
Yeah, thank you, Dan. And I really agree with the results of the polling. I think a lot of what we hear in the marketplace, as I mentioned, is the frustration around being right back in Excel. So again, we understand that, and at CoStar, we've really put a lot of effort into making sure that we give you a complete solution. So one aspect of that is our next point, automatic journal entry integrations and approvals. So really what we're finding out as companies switch over to CoStar from a software that they chose, literally 2 years ago, we're finding out that they did not have integrations that they needed. So, maybe software just doesn't offer the integration. We've heard that. We've also heard that the integrations were not complete. So, in other words, they could integrate, but not with allocations, or they could integrate, but you couldn't fully dial in the GL string. So that really left the accountants right back in a manual upload process. Hierarchy is another thing that's important. Really dialing in the proper company code, business unit, whatever you need. CoStar understands it's not a one size fits all type of market here, and so we give you the flexibility to have fully functional integrations and dial them in to your specifications. Nick?
Yeah, this is one of the things that I'm always scratching my head when companies don't at least explore this, right? So beyond just that the integration wasn't supported or wasn't done effectively, we've seen where it's perfectly viable, just not chosen to do, either because of timeline or because of budget. But again, I view it as investment now for the purpose of minimizing manual activities moving forward. And so it's bite the bullet up front, get it in place, and then you find that you're spending less time on reconciliations, spreadsheets supporting your application. So for me, this is probably one of the most important aspects of a implementation. Back to you, Matt.
Yeah, absolutely, and well said. I mean, I agree. You want to have the process as automated as possible. And really, the GL integration for journal entries is just one of the various types. We have hundreds of integrations across our customers, including things like AP, AR, master data, vendors, fleet vendor software, for example, integrating in. We talked about discount rates a little bit. And ultimately, even, on the outbound integrations, we work with companies like Blackline and Trintech for account reconciliation software. So really, you name it, we have probably integrated, and we'll support you every step of the way there. And again, it's not a one size fits all. You can configure CoStar to meet your needs. Now, the next point is really right in line with that, no one size fits all thing. We find out that a lot of software in the marketplace does not have the ability to add company-specific fields. Now, this is super important, though, because every company is somewhat different. So in CoStar, you can add fields to your lease abstract. Once you add a field, it becomes reportable. As I mentioned before, every field in CoStar is available for our Ad Hoc Reporting tool, with the drag and drop functionality. So we're finding that a lot of companies did not think about this up front. They were really just, as Nick pointed out earlier, they were under the gun to meet an accounting deadline, and they just wanted to have compliance with the accounting standard. But then now, a few years later, they're looking at the operational impacts and where a system like this could add value. And ultimately, they decided to switch over to CoStar to pick up this kind of flexibility. So if you have something like most companies do, you have very specific fields you'd like to track, you can add those in CoStar and integrate it in with your lease accounting and lease administration process. Nick?
Yeah, real quick, we're starting to see more companies leverage this functionality for a variety of purposes, nothing related to 842 accounting. A lot of times it just relates to sort of general business operations, leased assets that are also part of the revenue cycle. And so they're taking advantage of the fact that you're, in this case, extracting, a lot of leases. You're already pulling the data out. Why not pull more that goes above and beyond just 842 accounting for the purpose of providing other reporting or other data for the running of the business, quote unquote. Back to you, Matt.
Thank you. And I know we just have a few minutes left and one more polling question, so hang in there. We're going to get to that very shortly. This is just the representation of what we've seen, a generic lease solution propped up with Excel or CoStar with all these features that you need. One other aspect of CoStar that we won't dive into very deeply, but it's a really great functionality, is the ability for all the users to see market data on real estate right there in the software. Same data typically that a real estate broker would see based on our parent company's research data. So you can make calculations around FMV, the fair market value of your real estate right there on screen in your lease accounting, lease administration application. And one other thing just to highlight briefly is, again, it's not one size fits all. You get to configure your workflow and controls. So you decide how many approvals you need. You decide who gets to see what, maybe who needs read-only access to a certain module, but edit access to another module. And you can dial that in very specifically for your internal control environment. All right, one more polling question, Dan.
All right, thank you, sir. What functionality or feature would help your job the most for lease accounting under ASC 842 or IFRS 16? Is it one-click standard reports? Is it lease level details for auditors? Is it automatic remeasurements and retrospective true-ups? Integrations with ERP and general ledger, et cetera, or in-application access to market data for fair market value analysis. So again, click the radio button to the left of the answer that works for you, and then go to the right and hit submit to make sure it gets registered for credit. Again, if you're not seeing this polling question, go ahead and refresh your browser, and that should pop it up. I realize we're pretty close to time, so I'm afraid we're not going to be able to get to any questions from the audience. I'm sorry about that, but there's a lot of information and there's a lot of material for Matt and Nick to cover, and I know that they got through it. They got through a lot of material there. So you'll be able to see the replay of this in the archive version. We'll send a link to that in the next few days, and again, in about 5 business days, you should be getting. 3 business days, you should be getting an email with your certificate for CPE attendance, assuming you've stayed with us for 50 minutes and answered all of the polling questions, of which this is the last one. Again, we're asking what functionality or feature would help your job the most for lease accounting under ASC 842 IFRS 16. Click the radio button to the left of the answer that works for you. Go to the right and hit submit. I think we've got just about everybody has answered, so I'm going to go ahead and close this poll up in a few seconds. If you haven't answered, though, please do so now or within the next 5 seconds. 5, 4, 3, 2, 1. Just get a quick sense of the answers. Kind of a range, a lot of interest in just about every one of these features. So different needs for different folks. With that, unfortunately, as I said, we've just reached the top of the hour. I want to push this slide up so you can get a look at it. But I want to thank you all for joining us today. I want to thank Matt and Nick in particular for their presentation. A lot of great information, as I said, and we'll be sending a link to that to you in a few days. Matt, Nick, thanks again.
Thank you very much.
And thank you all for attending. We hope to see you at a future webinar.